If you follow the US markets, sometime or the other, you would have definitely come across news about the Fed rates increasing or decreasing. In this video, we're going to be diving deeper into Fed rate increases specifically, or hikes. This is an event which is likely to impact your market returns in 2022. So first, let's start with the basics. The Fed, or Federal Reserve, is the central bank of the US. The Fed rate, or also called the federal funds rate, refers to the rate at which banks in the US borrow or lend their excess reserves overnight to other banks. This rate is set by the Federal Open Market Committee, and the Fed typically hikes or reduces this rate to control the amount or the supply of money in the economy. So for today's video, we'll discuss 4 things that you should know about Fed rate hikes so that you can make better informed investment decisions. First, let's understand how the Fed uses interest rate hikes. The Fed's main job is to basically manage the monetary policy for the United States, which means controlling the supply of money in the economy. And interest rates are a tool that the Fed uses to control this money supply. Interest rate hikes are used by the Federal Reserve to decrease the supply of money in the economy, while lowering interest rates has pretty much the opposite impact. What does the Fed achieve by managing this kind of monetary policy? There are basically 2 goals that they have. The first is to ensure maximum employment for the citizens of the US, and second is to ensure stable prices, which is also referred to as low inflation. Alright, so second, let's understand why the Fed increases rates. The Fed decides to hike interest rates particularly when the inflation in the economy is on the higher side and the unemployment is low. When interest rates are higher, what it leads to is basically an increase in the cost of borrowing, right, across the entire economy, which then makes taking loans much more expensive both for businesses that want to raise money as well as for consumers that want to borrow for their own purposes. Now, businesses that cannot afford the high cost of loans would postpone their plans to new projects and they'd wait. Whereas higher interest rates also encourage individuals or consumers like you and I to save more money so that they can earn a higher interest rate on their savings. The overall effect, the combined effect of both of these, is that the money supply in the economy reduces because people are not borrowing, not investing in new projects. Also, consumers are saving more and more and not spending that. This tends to decrease inflation and cool down the economy. Next, let's take a look at how the Fed rate hike actually impacts the stock markets. The impact might actually be adverse on the equity markets. And why is that? So as we saw earlier, higher interest rates make it much more expensive for both businesses and consumers to borrow money. Now, as a business, the rise in the cost of doing business may actually lead businesses to lowering investments and then in turn having lower revenue growth as well as lower earnings growth for all of these public companies. An additional impact of interest rate hikes is that the markets might become much more volatile. And that has been the case since December 2021 when the Fed signaled that they're going to be increasing rate hikes in 2022. However, there's not a direct relationship between rate hikes and the stock markets. The impact would actually be felt after a lag. Finally, let's understand how a Fed rate hike may actually impact global markets, not just the US market. Typically, Fed hikes tend to impact markets across the world, and especially emerging markets. In the past, a rate hike has resulted in foreign investors pulling out of emerging markets and actually moving their funds to less risky assets like the US Treasury bonds. They do this because these kind of assets now provide much higher returns at less risk. And so a Fed rate hike can lead to capital outflows and currency depreciation in emerging markets. Alright, so in this video, we saw why it is important to be aware of Fed rate hikes and their potential impact when you are investing in the US stock market. Thanks for watching. If you like our content, subscribe to our channel and hit the bell icon to get regular updates.